Hope everyone had a good Thanksgiving. I'm going to quickly go through a quiet week. We'll just cover what happened for the month since we ended November. Some of the economic data, which is really starting to begin to show some of the things, the trends regarding inflation and PMIs. The big news for the week, and where I'll spend kind of the final two-thirds, is really on an interview with Marc Andreessen on Joe Rogan's podcast. He made a lot of waves this week, basically going through again this concept of deregulation. And in this particular interview, he talked about debanking, which I think is really important for the final part of the week, which again continues to be the major story for the year, really the last 2 years, which is Bitcoin. I continue to get more and more people for the first time looking to do something in it. So I'm going to keep covering it because I think it's the asset that's going to matter going forward for people as they diversify out of their portfolio, but in particular this coming year as we start to get more into AI agents and some things I'll cover in here in terms of maybe the US not having as much of a stranglehold over the technology side of earnings. And maybe it's not this year's business, meaning 25, but 26. But regardless, I'll take you through that. So just to start month for November, the S&P finished up almost 6%. IWM led the way. You're starting to get some kind of broadening out. This continued into the end of the month. So IWM had its best month of the year. The S&P had its best month of the year also, but the IWMs were up 11%. So the Russell 2000 small caps up a lot. In terms of the seasonals, my friends at Nautilus put out a different way, I think, of looking at the seasonals that we haven't really mentioned here, which is just a little foresight into the economic or the presidential cycle. And they covered it here. Election year, we've kind of been tracking on this path for the most part. Everything seasonally into the end of this year looks positive. So again, I just don't see any reason to fade what is just going to be a lot of money that'll be coming in from buybacks. The general seasonals, I think people are just riding momentum into the end of the year, and volumes will start to drop off. That being said, the first quarter of the first year of a presidential cycle, you can see that generally for the first quarter, you're kind of unchanged with a fall off that happens early. Given the positioning and sentiment, that's kind of what I would expect as well. I do think that's consensus. But if you look and you're looking at seasonals for next year, typically all of the returns for the first year of a presidential cycle happen kind of between late February and into early August. And then you really tend to go sideways for the next year and change, 15, 16 months before you start to get a big rally into the pre-election year. Just something to keep in the back of your mind as you're going through the seasonals. For the month, MSCI World ex the US, after a horrible October, it was flat again. You're just not getting any money going into into anything but U.S. stocks. MSCI World, or I'm sorry, S&P minus the performance of MSCI World, we had the biggest monthly differential since back in 2020 coming out of the lows. So the U.S. really has led with the Trump presidency. You're starting to get a lot of people, and I mean a lot. It's starting to become consensus to me. Everyone who I read is calling for Europe, or at least non-U.S., to outperform rest of the world. And it makes sense. This is the performance normalized since 2007. And you can see really beginning in 2011 is when we started to really break apart. This is MSCI World X, the US, which is only, which is down since, yeah, no, it's unchanged since this point in 2007. And here's the S&P. So you've just had this massive outperformance, but I want you to look at this chart because it's a little misleading. And this is one of the things that I really do want to bring up, both with AI and also with Bitcoin. So this is a different way to look at it. This chart is extremely similar to the one I just showed you. This is 2007, unchanged since 2007. The reason this chart's important is, most of you know this, but the iPhone came out in here. Once the smartphone came out, that's when the mega cap tech started to dominate. That's when the US started to dominate. So when you see world technology, it's not that the world is doing poorly, it's the fact that the US has the mega cap tech names, meaning they benefited the most from software. Google has, I mean, they have monopolies around most of the world. And so when you're looking at this gets into this concept of, are there borders in the future world? There's obviously geopolitical borders for war, but when it comes to earnings, technology has been this force which has really caused centralization. And AI and Bitcoin are the mega moves, in my opinion, towards decentralization, not just from a government perspective, which is where people get most of their focus, but AI and Bitcoin, or cryptocurrencies, and the blockchain will have a disruptive, decentralizing force on everything, including asset investments. So that's where I think this is headed. From the AI side, just looking at NVIDIA, it's traded down since the earnings. Nothing big. Again, their earnings were good, but as I mentioned after their earnings last week, that we've hit a pivot point where they're starting to talk more about AI agents. You're starting to get people talking about scaling laws kicking in, meaning the LLMs are not able to get any faster or get any better. And we're starting to get more and more people talking about the switch or the pivot point to AI agents. NVIDIA is going to benefit from it, but here's their rate of change. This is the 100-day rate of change. Again, this is when ChatGPT came out. We've gone through the euphoria of just the infrastructure build out. So NVIDIA has just reached a point that if you're going to have another year of dominated by massive moves in technology, NVIDIA seems unlikely to be able to generate those 50 to 60+% returns. Anthropic, one of the big AI companies, released their model context protocol, and as someone who's spent time with it and a lot of other things involved in the AI agent front, all of these things are coming out weekly. You're getting more and more ability to do things with agents, and so this is going to be a continuous trend. And again, I think the pivot point, as I mentioned last week, is away from the infrastructure trade and towards the adoption phase. Some of the adoption phase are things like Palantir, Snowflake. You can go through this with Salesforce.com, but there's going to be other places that benefit. So I think this is more of a spreading out, and this is why the S&P equal weight seems to be outperforming, or at least being a market performer. If you don't get the mega cap tech names to lead, it gets just much harder for concentration to win. So I do think next year is a year of decentralization in every possible way. This is just gold, finished down over 3%. Believe it or not, with Trump winning, when everyone was saying this was one of the trades to be in, it was the worst month of the year. Obviously, it still has had a very good year, but regardless, it was down. And Bitcoin for the month was up 40%. For all the Peter Schiff gold bugs and all the people who still like to continue. That puts Bitcoin up at over 100% this year, over 125%. It was up 150% last year. But when gold is up just under 30 and Bitcoin was up over 39 for the month, you're going to get more and more momentum people, more and more people diversifying into it. It's just the beginning for the Bitcoin rotation with the change in presidency, and I'll get into more of that in the next chapter of stuff. Economic data for the week. We got the PCE inflation, no doubt about it, sitting above 3% on core, no matter how you go through it. Another 0.3%. You're sitting up here. We're going to be above 3. I don't want people to freak out about it because the Fed is still cutting rates. And unless we start to see a bigger uptick in gas prices or oil prices, I just don't see this mattering that much for next year, or at least not in a big way. I don't think a slight move higher or less rate cuts is going to be that big of a deal. The Dallas Fed came out, and again, I showed you last week the Philly Fed outlook 6 months out. Well, this is the Dallas Fed one. The white line here is the Dallas Fed 6-month outlook. You had a very large jump. Now, this is overlaid with the PMI. You can see that over time, this Dallas outlook leads both up and down. It really started moving down here on this side. So we're we're going to see a bounce in the PMIs again, even if it's just kind of front loading orders in front of the tariffs. But I think you're going to see a change from people on this deregulation movement. as I'm going to show in the debanking side, this has really been a big thing, much more than I think people realize in terms of just the heavy-handed approach of the government towards businesses across the country in all kinds of forms. And I think people are, even if it's just hope, they're hoping there's going to be a change. The city surprise index went down and 10-year rates followed it. So 10-year rates came all the way back to 417, another kind of pre-Darling trade looking for spending and all of these things. And this is just not the trade, at least not yet. You're going to have to see some kind of spending. Right now, the market is discounting it as growth. And so now that we've got the city surprise index missing estimates, at least for the last week, you've got a big shift going on. In terms of gas at the pump, we were down for the eighth week in a row. So gas at the pump down another 7 cents. It just continues to move lower. I've said it before, until we get a shift there, I just don't see a change coming in the rate situation. I think you're going to need to see the inflation going higher a little bit from gas. I do think we're going to get that, but like I said, you're going to wait for the trend to at least start to show some signs of going higher. One thing I'm just bringing up as a heads up in case it becomes a bigger story, France and all these budget fears have taken their 5-year yields up, and this is just, believe it or not, that Greece now borrows at a lower interest rate than France. Unthinkable, 5, 6, 7 years ago, really forever. But you've got that situation going on. So just something to keep in the back of your mind. It could become a macro story next week, but France is definitely showing weakness. So here's the interview. This is Marc Andreessen. He was interviewed by Joe Rogan. He got into a lot of different things. It was not a lot on technology. It was dominated by his views on the importance of the election and politics. Marc Andreessen he had voted Democrat. I think he said on there all the way back pre-2000, and then has really made a shift. And the reason he made a shift is because of the dramatic impact that he felt from his tech founders on the government. And he specifically went through Operation Choke Point, which I brought up on here, but then he also went through the CFPB, which is an agency that was created during the Great Financial Crisis as part of Dodd-Frank. And he went through this and just talked a lot about it. He got a lot of press out there in both Silicon Valley, but also throughout the Bitcoin world, and I'll make that connection as we go through it. But debanking, or using the ability to take banking, restricting people from using the bank, which obviously has massive impacts for small businesses or individuals. You started seeing a lot of the founders of companies that came out and said they were debanked. I've talked to a couple of these people over the years, one of them Caitlin Long, who I'll bring up. But then also I've listened to so many podcasts, as you all know, and the debanking issue, Wells notices, using the CFPB has been a major theme. So if you want to hear some things on why, and this is not a political issue, this is just an issue that Elon Musk is heavily involved in talking about this. This is really the game plan for investing over the course of the next 4 years. You look in these situations to get a sense as to the areas that should benefit, and the fact that small tech companies with Andreessen Horowitz being one that's speaking out about what they saw, this should unleash a lot more innovation. It is shocking how much of a disruption this had out there. Musk sent out a tweet saying delete CFPB. I'm not going to go through these, but you should go read about them. And just to give you an idea, Elizabeth Warren on her Twitter, in her handle, with her kids' names, mentioned CFPB, and basically saying how important it is to protect individuals. So regardless of your politics, the most important thing is we are really opening up the side of taking down regulations, which is important for trades, which I'll show you some of them. But in particular, it's the crypto side that was impacted dramatically during the 22 period with FTX and everything along those lines. So crypto and the ability to innovate there, and they talked about it this week. So once he was out there, people started trying to speak up, but people were scared to speak up before, but now that they feel that they're going to be somewhat protected, they're going to give a little bit more detail. So I'm highlighting these tweets so you can go look on your own, listen to podcasts on it, and just get a sense as to how big this was that was going on. I mentioned Caitlin Long. She's the head of Custodia Bank, and she's got a pending lawsuit against the Fed that's scheduled for January 21st. She has been out there for years on this and talking about it. She actually put this tweet out on how to fix it. It's a thread, so you can go read it. She put it out today is Saturday. But you can go read this and just see how important this has been and ways to have it fixed. And the reason it's important to go through how to get it fixed is because this will have an impact on when people talk about decentralized finance, what they're talking about with the growth of cryptocurrencies. If you're looking for people that are looking more towards the altcoin side, Bitcoin, which is a safer one, it's a bigger asset, it's less speculative. This reminds me a lot of just coming out of 2002, 2003 in the internet, and just the scenario that had been playing out about trying to deal with a lot of speculative moves that had happened during that 99 to 2002 internet bubble. So just keep it going. Brian Armstrong, who I've said before is a great person to listen to on crypto, the head of Coinbase, again, just tying us back to politics and saying that the efforts to uncover alleged anti-crypto actions in Washington, again, he's been involved in this himself, getting involved in trying to figure out through the Freedom of Information Act, which is this and what he can get. So you're going to see more of this. I think with Trump coming in, you're going to have a lot more disclosures and transparency. But just to give you the facts, these are the de novo bank charters from 1984 on. You can see how many banks were created in the U.S., new banks. And then right when these agencies came in place, you had a shutdown. It's just another way to look at the regulatory side. Now, the Fintech stocks, here's what's happened. So this includes Block or Square. It includes the XAI, so the altcoin index, Sophie, Robinhood, PayPal. All of them have ripped higher since the election. This is when the election took off. All of them have traded higher, but you can see how correlated they are. So think of it as this is when the crypto thing came down. This is the lid on things, not allowing innovation to happen, going after FTX, going after everything. And now with the change, you're going to have people feeling more opportunistic to take risks. We've talked about this with the M&A side. Well, this is the deregulation on the stock side. This is a broadening out of things. This is one of the reasons why small cap banks have done good. And then just to emphasize the blockchain movement, I think you're going to see an acceleration on this. Deutsche Bank invests in the blockchain party this week. Deutsche Bank believes in the future of digital currencies. And again, I bring this all up because of what I said with Javier Milei, calling this the monetary freedom with emphasis on Bitcoin. And again, Bitcoin is not the currency. It's not the one that will be the most impactful for DeFi. It's an older technology, but this has a lot to do with being the digital gold or the digital store of value inside the digital economy. And that's what you're going to have is an acceleration in the digital economy. It was working anyway. So despite all of the things that I just highlighted with the debanking, remember, Bitcoin's at all-time highs. Senator Loomis was basically, again, let's transition this into the Bitcoin side, continuing to be out there, not just on the reserve, but saying Donald Trump, with all his cabinet selections, is building a Bitcoin army. We haven't got, as of yet, the head of the SEC, but Trump team eyes digital asset proponent Atkins for the SEC, potential head of the CFTC, expected to be crypto friendly. This is the opposite of what I just talked about with Senator Warren, with all the people that have already lost elections on the senator's side. She won. But you just keep this taking through, and you're just going to have an environment which is much more conducive. And that's why, despite the fact that we failed at 100,000, I'm going to keep emphasizing we've had a huge move in Bitcoin the last 2 years now, but we also consolidated during this period, and now we had an election change. These are major change points. So unless we're going to have a fall in the stock market, unless we're going to have some change at this point. I think we're going to break through 100,000 before the end of the year. Once we get above it, I think we'll find a new area to settle down with. But I think the driving force behind this has been the change in leadership in the U.S. And I think you have to, depending on what your views are on stocks and everything here in terms of the policies, the one thing that's a certain is that there's going to be a pro-crypto government in place. I just want to bring this up. This is a chart that Raoul Pal put out this week, and I got a lot of things on the last YouTube video about people saying, am I worried about liquidity? No. And I just want to make sure when people see these types of charts, and I've shown them before, global total liquidity, okay, there's about $80 trillion of M2. Now, I say dollars. In China and Europe, which are the two are behind, or China's ahead of the U.S., Europe's around the U.S. To contribute to the 80 trillion. China's about 42. The U.S. and Europe make up about 40. The biggest component of driving this higher, when the dollar is weak, that's when you tend to get these big sharp moves. The reason this is coming down is because the dollar's had a big move. This does not impact, in my opinion, Bitcoin. So I don't agree with this, although I do think you're going to see a move up, I said, through 100,000 before the end of the year. I don't think we're going to see a sell-off. And the reason why that I find this different, well, let me just go through the scorecard real quickly. This was put out this week by Mohammed Al-Arian. I only bring this up because he's including Bitcoin on there with other assets around the globe. Mohammed Al-Arian, just an important voice in the financial markets. And again, I do this because I think more and more people are starting to realize you can't leave it off, particularly when it's just dominating again in terms of performance. What I was saying with the liquidity side, so we're going to have easings. This is what we had this year. So we came from a period with no easing. So this is a global policy cuts by year. We had almost none in 21 and 22. And then since 2014, this was the second lowest in 2018. So rates are going to be coming down unless something changes. That's really the most important thing. And the reason you know that, if you go look at the returns for Bitcoin, here was 22, I mentioned, basically no rate cuts. And then here was 18, again, the second most in terms of no rate cuts. Aside from that, you had 153% last year, you had 128. The M2 is going to go higher because China, US, and Europe, M2 is going higher. If the dollar strengthens at a continued pace like it is, you will see dollar overall liquidity go down. But liquidity is going higher. And again, that gets important because if China's printing 20% more money or 30% more money or 40% more money, they're going to outweigh what's happening with the US dollar. So just want to bring this up real quick before I get in the final ending. Matt Siegel, who I've shown a lot of tweets on here. Again, I'm just going to continue to show that this is the way Bitcoin has to be valued, as a percentage of the fiat system. If you believe the digital economy is growing, think of this as old capital, bonds, stocks, real estate, the whole physical world, and this little area here of 1.8 trillion and 3 trillion of crypto. This represents the digital economy. For real estate, for artwork, for a lot of things, tokenization is going to take these up. You'll have more tokenization going on, which will open up. You're going to have decentralized finance. You're going to have more and more of this going on. But as I've said, AI and AI agents will grow this thing at a faster pace. So I continue to believe that the crypto space is at the beginning because of where the altcoins and the innovation have been destroyed. For the next 18 months, before the midterms, I expect there to be a lot of pro movement on this. And it continues as people get comfortable that the U.S. is going to be the leader here. You've got Brazil proposing strategic Bitcoin reserve this week. Hong Kong to eliminate capital gains tax on Bitcoin and crypto for hedge funds and family offices in bid to become global crypto hub. Well, who just said they wanted to be the global crypto hub? The U.S. So people are fighting for this. And again, Donald Trump has this impact of making the world kind of force them to be domestic and deal with things to keep up. Putin signs bill recognizing Bitcoin as property in Russia. Vancouver mayor proposes a motion for city to adopt Bitcoin as a reserve asset. These are all this week. And then last week, before I was able to put this out, a Polish president candidate pledges to make Bitcoin Poland a crypto haven. That's it for this week. You're going to continue to get more and more. For those of you who are more, viewers I've had for a long time from my days at the hedge fund, which are more used to most of this being the old traditional finance world. Bitcoin is something that will have an impact on all of you next year. I find it hard to believe that people won't be forced to have a view on it. I'm trying to make the bridging between this a little bit easier to understand, including politics, including banking, including artificial intelligence. I'll continue to do that, but I think every week the amount of news that's coming out on this front is far more dramatic than what's happening on the traditional finance and macro world. That's it for this week. Hope everyone had a good holiday. I'll see you next week.